Okay, hey guys, very good morning to you. This is Brian from The Boring Husband. Okay, for today's video, we're going to be talking about 3 technical analysis indicators that I use on a day-to-day basis. Okay, I want to keep this very spontaneous, so it's not really scripted. So I'm just going to be a little bit candid as well, and most importantly, truthful about these indicators that I use. Okay, now at the onset, I have spent a very long time looking at charts. Okay, and when we say looking at charts, it's not really by like the amount of years that I've been doing this, but rather the amount of time I've spent looking at almost every single indicator out there. Okay, now the indicators that I prefer are the ones that not say are foolproof. Okay, first of all, to set the record straight, technical analysis is not 100% foolproof. Okay, when you guys look at charts, when you put these indicators in place, they don't always tell you what will happen in the future because you're using the past to predict the future. Okay, so when you look at the idea of a hit rate, okay, of you looking at a chart and saying, hey, if I buy here, I get it right, it will never be 100%. Okay, if it's 100%, I wouldn't even be sitting here. Okay, but at the very least, I like to think that it gives you a little bit more certainty, okay, that you may get it right, okay, and we're not looking for like you'll get it right like 8 out of 10, 9 out of 10, okay, but at the very least, okay lah, I say maybe 6 or 7 out of 10. If you're really good, then maybe 8 out of 10, but it will never be 10 out of 10. So what I want you to know is that if you look at one indicator today on one stock, and you look at the same indicator on the same day on another stock, it's going to give you 2 different results, okay? So what you want to do is that when we start this kind of journey of technical analysis, you want to be open about it. Okay, you want to know that, okay, these are just guidelines. Okay, at the end of the day, it's never set in stone. These are just guidelines to kind of guide your trades, guide your investments, to kind of help you pick the best points, okay, but it will never be, once again, 100%. Okay, so when I choose indicators, okay, the first thing that I look out for is I want a very simple indicator, okay? If I'm going to be looking at 50 stocks every day, 50 charts every day, I don't want to be looking at the indicator and the indicator still needs me to interpret take calculator. No. I want to look at the indicator, okay, and I want to just look at it 10 seconds, bam, do I buy, do I sell, end of story. Okay, so the very first indicator that I like to use, okay, is this indicator called the RSI. Okay, and for the case study reference that I'm going to use today, to kind of start off the whole thing, I'm going to use the QQQ. Okay, so it's the NASDAQ index. It's very fair. Okay, I'm not going to promoting any stock here, so I'm just going to use the whole index as a benchmark. Okay, so depending on what platform you use, okay, the good thing about RSI is that it's relative strength index, and it's RSI across all platforms that you use. So whatever platform you're using, you just put in RSI, the thing will come out. Okay, so I put in RSI, okay, and I kind of bring this up a bit. Okay, so the RSI is this here. Okay, the RSI is the relative strength index. It shows you the strength of a stock. It shows you its momentum. Okay, but all the bullshit aside, okay, what you're looking at in the RSI, okay, is basically there's this line at the top here, okay, that's 70, and this line at the bottom, that's 30. Okay, so the RSI shows you the momentum that the stock is trading at. When the stock trades above the 70 line over here, okay, basically what it's telling you is that the stock is overbought. Okay, so it means that it's time to sell. Okay, because everybody is wow, damn hot into it. Okay, must not that you must sell, but it's ideal to take profits at these levels. Okay, likewise, when the stock hits when the momentum of the stock hits rock bottom, okay, something like this, okay, that's when the stock is oversold. Okay, so classic, it's a sign to buy. Okay, so if we just kind of look at the stock and kind of do this 10-second look, right? Okay, we can tell that, okay, based on these laws of overbought and oversold, okay, right now, okay, or rather a few days ago, okay, we were at severely oversold levels, overbought levels, hence the stock retraced. Okay, so at the very onset, okay, if you're looking at this chart 3 days ago, and you see that everything is overbought, you don't buy. End of story. Look for your next play. Okay, it's really as simple as that. Okay, and not that the RSI is correct. Okay, 10 out of 10. Okay, in fact, I would love to give some examples where this RSI is wrong. Let me just see. So yeah, we can see here, okay, even though it showed that the stock is that the index is severely overbought, that even in the next few days, right, it continued to move up. See, so the RSI is not 100% correct. Okay, but by and large, okay, if we look at it as a whole, okay, we can see that, okay, when it hit overbought levels here, it retraced. Likewise, over here, overbought, retraced. Okay, and right now, even you see, problem here, we were overbought at this point, and it continued to be overbought even more. See, so never 100% correct. Okay, but my point is that if you look at kind of the hit rate in history, okay, the RSI will be right more than wrong. Hence, it still exists today as a technical indicator. Okay, so when you look at the stock, okay, let me just kind of pick one of these other stocks over here. Okay, right, so Tesla, okay, over here. Okay, fantastic example. Wow, look at that. See, they even make it green for you to show you that you shouldn't be buying this thing. Okay, or not at these levels. Okay, so let's look at Tesla. The thing I like about Tesla is that Tesla is a very sensitive to technical analysis kind of stock. Okay, so you look over here. Okay, in fact, I tell you, man, this trading view is really one of the best. Okay, they don't pay me to do this, but I really find them to be one of the best. Okay, so when the stock was severely oversold, they even made it red for you over here, man. Okay, so and over here, likewise, when the stock was severely overbought, they made it green for you over there. Okay, so if you don't trust the RSI, at least trust the colors that you see. Okay, so the point I'm trying to illustrate is that if you look at any stock and you put in the RSI, okay, and you want to know whether it's time to buy or it's time to sell, in my opinion, what I've always, or rather like to do in the past is that when I see it's green, I look to take profit. When I see it's red, which means that it's severely oversold, I look to accumulate. Okay, and anything in between, I do nothing. Okay, because anything in between, okay, we don't know whether it's going to move up or move down. Anything in between is very unpredictable. Okay, if I'm looking to go bite a big chunk into it, okay, I always wait until it goes to oversold. Okay, so this is one indicator that I like to use. Okay, the other indicator that I like to use, okay, moving back to the QQQ, is the moving average. Now, in every chart, put in the 50-day, put in the 200-day. Okay, basically when the stock, okay, two things you want to take a look at. Okay, when the 50-day moving average breaks below the 200-day moving average, this is called a death cross. Okay, which means that it's a bearish sign. So whenever we see, right, okay, whenever we see the 50-day moving average break below the 200-day moving average, this is typically known as a death cross. It means that the by and large trajectory of the stock has shifted from bullish to bearish. Okay, we can see that with the formation of this death cross in about Q1 last year, that the QQ went all the way down. Okay, so not that it's foolproof, but usually 9 out of 10 it's right. Okay, and likewise, when the 50-day moving average breaks above the 200-day moving average, it is an indication that once again from bearish has shifted to bullish. Okay, now the problem with this, okay, is that sometimes for certain stocks, you kind of see this 50-day moving average kind of keep going up and down. Let me try and find a very good example for this. So if you look at Alibaba over here, okay, so like I said just now, okay, when the 50-day cross above the 200-day, it's bullish, so it went up. Okay, likewise, when the 50-day crosses below the 200-day, it's bearish. So we can see over here, when these two lines, right, they're like very close to each other, usually it's a sign of indecision in the market. Okay, so it's not so technically, right, okay, if let's say you bought I don't know lah, like somewhere here where you think the blue line is going to go above the green line, and then while you're all in, man, life savings, whatever, CPF or everything, all in, sell house, everything, and then you see the stock go down and you'll be like, oh my god, this indicator sucks. Okay, so like I said, trading indicators are not 100% foolproof. Okay, but by and large, okay, if we just kind of head back to the QQQ again, we can see that, when the 50-day crosses the 200-day, usually it's a bullish, it's some bullish momentum, and when the 50-day crosses below, it's bearish. Okay, so there's a lot more in a moving average, like 50, 200, 100. Why do we use 50? Why do we use 200? I'm going to skip all that nonsense. We're going to go straight to it. Okay, but by and large, if this hasn't formed, okay, like for example for PayPal, I believe it hasn't formed. Yes, great example. So look at this. Okay, recently I've been buying PayPal. Okay, we can see that the death cross formed. Okay, so that was like very late in 2021. Okay, so 50-day fell below the 200-day and it's been like crazy from there. Okay, we can see that the 50-day has not yet moved up, okay, above the 200-day, which means to say that the rally is not, the selling is not done yet. Okay, there could be more selling in the future, but when we see the moving averages start to kind of go a little closer to each other, like that's usually a sign of strength. It's an indication that maybe the selling could be over soon. Okay, but if you're seeing like, wow, like between this like big gap here, don't buy, man. That just means that there's a lot more pain to come. Okay, the last technical indicator that I like to use, okay, is what I call the Bollinger Band. Okay, so I think it's this one. Brilliant. Okay, so the Bollinger Band is basically, if I could put it very simply, okay, it's a rubber band. Okay, it shows you you know when you breathe, like you breathe in, you breathe out, you breathe in, you breathe out. Okay, this is exactly what the Bollinger Band tells you. Okay, so but I find the Bollinger Band to be more effective for shorter term trades. Okay, when they're telling you when is the breathing in and when is the breathing out. Okay, so basically, long story short, okay, Bollinger Band is basically a little channel like that. Okay, it has two things. Okay, what we call the upper band, which is here, and what we call the lower band that is here. So I haven't changed the color, but yeah, you can tell lah. So what the Bollinger Band is trying to tell you, okay, in short, is that whenever the stock is like breathing in, okay, a lot of momentum, okay, it will hit the upper Bollinger Band and it will retrace down to the lower Bollinger Band. So it's like breathing in, breathing out, breathing in, breathing out. So we can see over here based on the QQQ, okay, so it hit the lower Bollinger Band, okay, then you see not 100% right, because you see it hit the upper Bollinger Band and it just continue to stretch. Okay, all the way until now, okay, breathe in, breathe out, okay, and like that. So what we're trying to see here, okay, is that in terms of the Bollinger Band is that in recent time, okay, there's a lot of momentum, okay, in the QQQ, it's very strong. It hasn't retraced, okay, so hence, if it hasn't retraced, then it may or may not be the right time for you to buy, depending on what kind of strategy you're trying to employ. Okay, but overall, okay, when I look at the chart, okay, and I put these three indicators in place, okay, to me, not that if a stock were to meet all three of them, okay, that is a buy, absolutely not. Okay, but at the very least, when I'm kind of trying to get a very quick, bird's eye view, 10-20 second idea of where the stock is going, whether it's bullish, bearish, buy, sell, I kind of put these three into place, and each of them kind of complement each other. Okay, but at the end of the day, okay, this is what I use, okay, to get my very, very quick, 20-30 second analysis of each chart. Okay, to end of this video, okay, I hope that all of you learned something. Okay, to me, I've taken years, okay, and lots of time to really understand these three. I think that once again, TA is not 100% right. Okay, when you get it wrong, you will feel very sad. You're gonna be like, hey, shit, man, I put so much hours, I listen to Brian talk all his crap, and I still can't get it right. Okay, don't be discouraged. Okay, it's really just how it is. If you get it right all the time, then please, none of us will be here. Okay, but by and large, these analysis tools have withstood the test of time. Okay, it's a reason why, like, I don't know what uncle economists, back then teaching this all the way until now. It's because they have withstood the test of time. Is that people have won more than lost using these tools. Okay, so they have helped me, and I certainly hope that they help you. With that, have a great weekend ahead.